Good morning, I'm Harley Schlanger from the LaRouche organization with your daily update for the first day of February 2021. Well, events on Wall Street in the last couple of days show why it is that Lyndon LaRouche warned many years ago that unless we shift back to the American system of physical economy from the monetary policies of the neoliberals, going back to the 1971 decision to take the dollar off the gold standard and set up floating exchange rates, that unless we do that, we're headed for either the biggest crash in world history or a series of smaller crashes that will each get bigger and bigger and bigger until you have a disintegration of the world economy. Now, events in the last days show how desperate the City of London and Wall Street are, the financial firms and their central bankers, to get new massive investments, more liquidity from government, from private funds, and to direct it into a green financial bubble. That is to create a new financial bubble that will add nothing to the physical economy. In fact, it will detract from the physical economy, but will protect them, they think, for at least a period ahead. This is what the Great Reset is all about. This is what the Davos billionaire crowd is trying to do, and that's what the Green New Deal is about. It has nothing to do with protecting the climate and nothing to do with sound financial policy, and has everything to do with a desperate, hysterical drive to continue the flow of liquidity into bankrupt firms, bankrupt banks, to prop up unsustainable debt. The debt is ballooning faster than ever, and the bubble now depends on negative interest rates and government pumping of liquidity. But pumping of liquidity into what? The margin lending is skyrocketing. Why? Where's it going? It's going into the stocks of insolvent corporations. So liquidity going into insolvent companies is not a plan for a good economy. At the same time, it's going into new forms of scams, whether they're run by the big hedge funds and the big guys, or the so-called democratization of the markets with the little guys like Robinhood and so on, moving in through the Reddit platforms to screw the hedge funds. Now, while I have to say I don't feel sorry for the hedge funds because they're the biggest swindlers on the planet, what we're seeing is the gaming of the gamers. That's not a solution. The GameStop, AMC drive to push the stocks up, to hit the short sellers from the hedge funds, you might take some pleasure in watching the hedge fund operators scream for more regulation. But what's the benefit? What's going to come from this? The hedge funds want it stopped. They're now saying they need regulation. But regulation to do what? To allow them to continue their game. Now, what's their game? It's manipulating markets. You think these guys don't realize they're buying stocks in companies that are not producing, that are not generating profits, that are not producing goods, and then getting rich off the trading for their clients? Well, here are some comments from Jeremy Grantham, who's someone who knows this from the inside. He made in an interview the other day. He said, the U.S. stock market is in a bubble of epic proportions. He said it's a monetary game, and you can keep monetary bubbles going for just so long as there's confidence that's rising and as long as there's a flow of liquidity. But he said what he sees now is a state of hysteria. He said we have a fully fledged epic bubble. And he said this has been going on since Greenspan arrived. Well, that's what Lyndon LaRouche had been warning. Now, he said they're just borrowing more money to go into the market with the idea that the market will always find the self-regulation. Stocks will go up and down based on sound principles. This is the argument you hear all the time about how the markets themselves, if left alone, will work perfectly. Well, he said actually the real mantra that's going on is with the Fed on our side, stocks will rise and everything will be okay. Now, he gave an example of the volume of over-the-counter trading of stocks, and he said that from February to November, the volume of daily trading quadrupled. Then he said from November to December, it tripled again. So you see an exponential increase in the volume of trading. And trading what? Stocks of no inherent value. And he gave an example of an investment that he has in something called QuantumScape. And he said, this is a company that's not going to produce a single battery for 4 more years. They have no profit, no sales, but they now have a market capitalization bigger than General Motors. He said they've gone from $10 at their initial public offering to $130 per share. So how does a company that's producing nothing generate that flow of funds? Well, it's people who are betting that someone else will be the bigger sucker and eventually get stuck with that. Now that's what a bubble is about. A bubble is about people looking for companies in which they can park funds in the short term, generate a run on that share, so that a run meaning people going into that share, buying it, boosting the price, and then getting out before people realize they've just bought a zombie corporation, bought a share of a zombie corporation. That's what the market is today. And because of the role of CNBC, the various financial networks, Fox Financial News, the fact that they're all part of the game. And the people who are reporting these things are all making money from stampeding you into these stocks, or stampeding you into selling the stocks so that the short sellers can gain. What does this have to do with producing food, with producing necessary goods, upgrading a healthcare system which is in terrible disrepair? It has nothing to do with it. This is where the market is completely separated from the actual needs of human population. And what the hedge funds are now saying is, let's go back to the previous levels where only the professionals are allowed to do the speculation. We don't want this democratization. But the problem is not democratization. The problem is the whole system is corrupt, it's bankrupt, and it's heading toward an epic crash. Now, this is what Lyndon LaRouche saw in July 2007, when he made his forecast that the banking system is heading toward a collapse. And he was right, and he was right for the right reasons. The mortgage-backed security investments created a bubble of unsustainable rise in house value, unsustainable because the actual income of the people buying these increasingly costly houses with increasingly innovative financial scams to give them the credit to buy them were not supportable because their incomes were not going up. The incomes going up were of the traders who were buying and selling these mortgage-backed securities, which are little pieces of hundreds of mortgages bundled together, which had nothing to do with whether people are able to pay the mortgages or not. And as a result, we had a bubble that popped. Millions of people lost their homes. The speculators made out well. And in fact, most of them got bailed out. That's what the TARP plan, the 2008 bailout, was about. There was a Bush plan that was then adopted and escalated by Obama. And the Dodd-Frank bill, which was supposed to re-regulate, did nothing of the sort. It gave, for example, swap dealers the right to write the rules for swaps trading. Derivative dealers wrote the rules for derivatives trading. Instead of outlawing these practices, which probably should be outlawed, and when there are crashes, let the people who did the investing, who are holding these phony instruments, let them eat the losses, not the taxpayer or the Federal Reserve. In fact, the Fed was the leading helper for this whole system. It facilitated this bubble, and it continues to do so today. That's where the problem is. And so it's from that standpoint that if you look at what the Great Reset is about, it's about how do you continue a bankrupt system so that the people who created the bankruptcy get out of it with more money, because there's an escalation of, or a vast increase, I should say, in the gap between the richest and the poorest. More and more in the middle class are collapsing into the states of poverty, while there's an incredible transfer of wealth to the richest. And that's what they intend to continue. That's what they tried to do when President Trump was in there, and there was not much done to stop it. In fact, it increased the wealth inequality. And under Biden, it's going to increase on steroids because he has no plan to deal with this. The Great Reset, the Green New Deal, will actually increase the wealth inequality and will make it impossible for millions of Americans to pay their basic monthly costs. Now that's why there needs to be not a great reset, but an American system policy implemented. And this is where LaRouche's 4 laws come into play. And I'd urge you, go to our website, the LaRouche Organization website, and go to the LaRouchePub.com website, which is the Executive Intelligence Review, and study LaRouche's 4 laws. Search for it, look it up, read it. Figure out why we need banking regulation, why we need a national bank for Hamiltonian credit instead of a private central bank, which is just creating liquidity for the swindlers. Why we need investment in infrastructure to direct funds into the real economy and then increase spending in research and development, science and technology for the future. That's the way you address this. To try to come up with a plan that balances between the so-called democratization of the markets and the hedge fund swindlers, that doesn't work. The only benefit there will be to the people who speculate. And if you think that getting in on the speculation is going to make you rich, you're going to end up sitting there with a completely blank portfolio, as it's going to be looted by the professionals who know how to do these things. So that's my update for this morning. I'll be back with you again tomorrow.